Hello, welcome. This is Business Breakfast coming to you live from our studios here in Lagos, Nigeria's commercial capital. I am Frank Omalape. That's what's coming up in a moment on the show. Nigeria government suspends subsidy removal for another 18 months, approves about 3 trillion naira to sustain subsidy. In the first part of the show, we'll take a closer look at the implications on fiscal policy and by extension, the economy. Also coming up on the program, equities market all-share index appreciated by 0.55% week on week as market capitalization rises to 24.89 trillion naira, closing week positive. It's earnings season and we keep a track on some of the financials results coming into the market. Well, we have these and many more coming up on the show today. This is Business Breakfast, but let's take a look at some top business stories making the rounds now. The Nigerian National Petroleum Company Limited has disclosed that it spent about 100 billion around refineries rehabilitation in 2021, and those funds were pumped into revamping the facilities on a monthly basis last year. It revealed this in a report on the funding performance of the oil firm from January to December 2021. In the NNPC's recent funding performance report, the firm stated that 8.33 billion naira was spent monthly for a period of 12 months, beginning from January to December 2021, on refinery rehabilitation. Although no refinery was mentioned in the report, particularly Nigeria's refineries had been under the management of NNPC, as the rehabilitation of one of the facilities, Port Harcourt Refining Company, had been ongoing. Other refineries under the purview of the NNPC include the Kaduna Refining and Petrochemical Company, as well as the Warri Refining and Petrochemical Company. Efforts have been made by the federal government to get the country's refineries back on stream, as Nigeria currently imports bulk of its refined petroleum products. Anyway, from there now, the Central Bank of Nigeria digital currency e-Naira has continued to attract the interest of Nigeria's banking public, home and abroad, with the total downloads hitting 694,000 exactly 95 days after it was unveiled. A recent breakdown of the figures shows that a total downloads via iPhone operating system stood at 136,000, while that of Android was 558,000. Furthermore, downloads have continued to increase to almost 700,000. In-Naira wallets were downloaded from North America to Australia and all over Africa. Recall President Muhammadu Buhari launched the digital currency on October 25, 2021. Buhari last had said that with the Naira, the country's gross domestic product was projected to rise by $29 billion in the next 10 years. He had stressed that Nigeria was the first country in Africa and one of the first in the world to introduce digital currency. And now the Association of Licensed Telecommunications Operators of Nigeria has said the likelihood of interference between the aviation industry and 5G network frequency is very low. According to the association, there is no greater risk of interference with 5G networks than there is with any of the existing transmissions taking place and the frequencies adjacent to those used by radio altimeters. Alton further disclosed that the context in Nigeria is different. The gap band that exists between the spectrum frequencies allocated by the NCC for 5G services and those allocated to the aviation industry remains in the region of 400 MHz, in line with the guidelines instituted by the National Frequency Management Council, the government agency responsible for sectoral allocation of spectrum at the NCC. And in the meantime, the Nigerian Civil Aviation Authority is considering a major review of domestic airlines operating license fees and other charges in order to ensure its bills are aligned with global best practices. The Director General NCCA, Captain Noho Musa, disclosed it during an interview in Lagos. He said the regulator was subsidizing the industry considering how low its charges had remained over the years. stressing that it was important to embark on a major upward review of the charges. According to him, the agency does not benefit from allocations and is not out of place to ensure proper charges are given. Well, that does it for now with the top business stories. Well, here's what's coming up in a moment. After this break, we'll take a closer look at the suspension of subsidy removal for another 18 months and the implications of this on fiscal policy. We'll take a break and I'll be back in a moment. Please stay with us. Hello, welcome back to the program. This is Business Breakfast coming to you live from studios here. Let's get into the conversation right away. Following the plan to delay implementation of the Petroleum Industry Act and retain payment of petrol subsidy for 18 months, the federal government last week approved 3 trillion naira for the new subsidy regime. The Federal Executive Council approved this sum at its weekly meeting in Abuja. The 3 trillion naira now budgeted to sustain the payment of subsidy in 2022 alone amount to about 17.5% of the total of 17.126 trillion naira to in 2022 budget that was signed into law last day of 2021. Analysts fear the approved 2022 budget already has a deficit of 6.39 trillion, which is about 37% of the total figure. Well, the 3 trillion naira approved by the FEC is about 55% and 43% of the capital component and recurrent expenditure of the 2022 budget, respectively. Implementation of the PIA, which stipulates the removal of petrol subsidy, was initially meant to begin in February, but was later shifted to July. But with this outright suspension of the subsidy, what is likely to be the implication on the fiscal policy? That's where we are major on our talking point now. Mr. Akin Fatuke is public affairs analyst and chartered accountant. He joins me now via the telephone. Thank you for finding time to join us again on Business Breakfast.
Always a pleasure, Frank, and good morning, Nigerians and friends of Nigeria who are listening to us.
Yeah.
I'm happy to be with you there.
Yeah, good morning. Now, the history of fuel subsidies is traceable to, 70s. They were first introduced and all of that. You have all of that, why there should be subsidy and why there shouldn't be subsidy. But the question here now is, now at the time that the government is set to remove subsidy, is reversing its decision again on that policy. Are you surprised about this?
Well, clearly, I cannot be surprised as somebody who has worked in that industry and really, respectfully speaking, very humbly speaking, you don't have to work in that industry for you to understand the politics surrounding its introduction in the first place, how we have wasted our years and our resources over the time, and now the political will to reverse. You know, there is this saying that it's easy for you to throw an object up, okay, even if it's going to be working against the force of science, of physics. It's easier for you to come down because at the end of the day, you will not be in control. Yes, of course. At one point in time, when Nigeria decided that we are going to go into a abrupt WRAED, abrupt federalism, whereby we jettison economics and decided that we are neither going to be welfareists, we are not going to be capitalists, we are not going to be socialists. We tried all forms of things that included so-called federal character, including petrol subsidy regime, and it has a twin that is called Petroleum Equalization Fund, whereby the idea being that you want to sell yam in Kwara Namoda, where it is planted, or in Benue, and you want to sell it at the same price as you want to sell in Lagos. Of course, forgetting, of course, that there is distance, there is nearness to production and what have you. So all that went, at one point in time, we had premium, we had super, motor spirit. You could drive into the petrol stations, decide to pay at the premium if you wish. Then Nigeria now then decided that no, that's not what we're not going to do. We're going to try and make sure we equalize. We did an economics of production management, which you and I will find difficult to understand, and decided that we're going to set up a refinery in Kaduna, I meant to say, all to making sure that we pipe lines from the south where the crude is produced at the refineries up there. No, it went on fine initially, but as time went on, we are not able to, as it were, maintain. Indiscipline got into it. The 10%ers, like Uzogu said during the school there, came in with their portfolio, and then what did they do? They bastardized the whole thing. And one thing we are not able to renew, it will get OTUs. OTUs means that it gets backward in terms of technology. And then the big boys, the cowboys will come in, and then we've lost trillions upon trillions, trillions upon trillions in dollars. Yes, that may sound like an exaggeration. Trillions upon trillions in dollars, that money has gone into wrong pockets, into wrong priorities. Here we are. Very difficult for us to now summon
let me quickly come in here. Just a moment. I really want to know your stand, because some experts were disappointed because of the suspension. A lot of people were expectant that the subsidy removal shouldn't have happened. It could have gone the way the government planned it, given the fact that it's in alignment with the PIA. Give us your stand. Should the subsidy on petrol go, or is this something that we still have to hold on to?
Frank. Nice one.
I just want to know your stand. I mean,
throw me under the bus as much as you can. And I will tell you, when you have a cancer patient, there are different ways of looking at it. And you will continue to lie to that cancer patient. You will continue to say that cancer patient can go to church, a mosque, or a shrine. Continue to lie. The recurring word here is lie to deceive. You deceive and just continue to lie and say, yes, there's hope tomorrow. Oh, it is morning now. You say it must be night because you're in Australia and all that kind of stuff. Continue to lie. But reality of the matter is that the political way to do it is like putting a gun to your head, my dear brother. Is it easy for you to pull a gun to your head and then fire, believing that you are doing your roulette 21? It may be one of the ones that has no bullet. What if it's the one that has a bullet? You are dead. So, one, the truth of the matter is that Nigeria is on its knees economically, and as far as that indicator is concerned, there is no true way. We can't continue. Those who are stealing will not stop stealing on account of the fact that subsidy or not put subsidy. They will always look for their own first 10%, like I said. Secondly, you are the medical doctor. What do? Do you go and tell this patient, go and take care of your house, go and write your will and all that kind of thing? Because that's the truth. But you make that pronouncement, and then the families of the affected might just pounce upon you, and before you know what is happening, you are dead. Politically speaking, the timing is not only wrong because we are planless and because we do not have people who have the real interest of planning for this at heart. So my one line, two line submission is you have postponed the evil day. We have created another avenue for people to continue to steal, and they will, for us to continue to go down the drain in terms of our capacity to what? To generate employment in that industry. Something similar to what happens in telecoms. If you ask me this question about telecoms when it was going to start, I'm going to tell you, no economist will tell you that it was going to be easy. But because we are not prepared, you can hear what the Minister of State said, because we have not put certain things in place. Is that how you plan? Do we have planning in this country? Therefore, you just go ahead.
Just a moment. If you may allow me.
Not prepared for the fallback of the consequences. So, Frank, in economics, you talk about opportunity cost. The cost of foregone alternatives. The cost for Nigeria. And we are beginning to see the cost for Nigeria is huge and humongous. But we are not going to see any revenue benefit from it. So, whether Nigerian Labour Congress, whether you, Frank, whether me, whether we are saying whatever, let's continue to eat our tomorrow, today. We cannot really plan it.
So in your own view, so in your own honest view, when do you think is the right time to do this?
Another very difficult question. The right time was about 20 years ago. Now you get what I'm trying to tell you here. The right time was over 20 years ago, but we refused. We kept on dancing in the sun. We kept on doing paloko and deceiving ourselves, because that is the only thing that will help us to win elections, to go in back there and going to plunder the country amiss, not to be rigorous in what we needed to Nigeria made a proposal, Prince Tillerson, who eventually became the Secretary of State to Donald Trump, came and said, you know what? This refinery that you are talking about, yes, many of the oil majors were part of it. Again, a lot of corruption that went in there. Let's all sell it for $1. You may have forgotten. What does that say? It's indicative of the fact that that place was virtually a shell. A shell. It was survived
so how much longer?
By Yaradua. The labor complex, like I'm saying today, also now no, it's our national asset. You must not do it without a rigorous review. We lost that opportunity then. Here we are, again another opportunity for us to do, and the labor complex are all shouting and saying happy.
So how much longer, Mr. Fatuke? I was going to ask you. 20 years ago, that's 2 decades gone already, and we didn't do this like you said. How much longer do you think we need to push it further?
Okay, yes. Remember we had a military president in this country, head of state. His name is Ibrahim Babangida. At the height of it, when he was about leaving, he asked a question that he still wondered how it is that Nigeria is still standing on its feet. A shell.
Okay, I think
a shell of itself standing on its feet. 20 years ago was when we ought to have done it. Yes, the cancer patient that we are talking about, we are prodding, we are lying to ourselves. It's standing on its feet, but the more the time goes, the more the shell that we are going to get, and then the more our unborn generation will suffer. A lot of it.
Now point taken. I want us to dwell more on the fiscal policy in 2022. Most analysts fear the current 2022 budget does not have provision for fuel subsidy beyond June. And given the fact that the budget has a deficit of about 6.39 trillion, which is about 37% of the total budget figure of 17.126 trillion. So what do you think the impact will be on the fiscal policy?
It's not what I think. I'm not thinking. I am telling you authoritatively, we are in dire straits. We are in trouble. We are in big T, that is called trouble. We had a budget of 17 trillion, of which you just mentioned that over 6 trillion is in deficit that we are borrowing for. Now, we are now extending by 18 months, and by the way, go and do the math. We are asking for 3 trillion to look at subsidies from the month of July downwards. Okay. That again is based on the fact that the plants, the official exchange for our crude per barrel is $85. It's moved to $90. The higher it moves, the more that deficit is going to become, because you are import dependent. And so 17, let's even take it at 3. 17 plus 3 is 20 trillion. The capacity for that budget of 2022 is 10 trillion. Which means 20 minus 10, we are talking of going to borrow about 10 trillion. 10 trillion. What is the implication? The implication is the fact that money that we are going to bring in, we are going to steal, we are going to plunder, we are going to consume. What physical expectation do you have in a situation where you have population rising at 3% per annum? Out of school children, IDP, people are not educated the way they are supposed to be educated. Nigeria is walking on a tight rope, and we do not have people, unfortunately, both those who are ruling us and those of us who are being led, not to be able to tell ourselves the truth, to seek for this accountability. Realistically speaking, the unemployment and the shadow unemployment that we have, that is not only galloping at a high rate plus inflation, means that our misery index is going to be high. Hey, Nigerian, somebody is saying this, and I mentioned this in all my discourses. Let us all go and tighten our seatbelts. And I said, they know
Just before I allow you to go.
It's going to be very hard. Nigeria is not productive. We are borrowing and borrowing because you know what is happening. I hope that those we are going through will not just come one day and just come and see the assets. Will be carrying about a lot of some of those things. And those who are looking at us, both from the federal, from the state, from local government, from the legislators, they are all dancing in the sun as if this is the time that we all should be weeping, including Labour Congress. There is no victory in this. We have just created an avenue to continue to plunder the country in abyss. Well, that is what the education that I was given. Okay? I want my education to be very functional. That is what the education has just told me. Physically speaking, Nigeria is in dire strait. In fact, some economists will tell you that unless care is taken, we might be going down the bankrupt way.
Let me ask you the final question on the show today before I let you go. If you can do this in 30 seconds, that's okay. I mean, some people say even if the subsidies are taken out, the question will be, will the government be willing to relinquish the control of prices? Because despite the provisions in the PIA, which allows for the complete deregulation of the downstream sector, now that there is no subsidy, I mean, now that the subsidy is still going to remain, how close do you think we are to the implementation of the PIA? Because the PIA make provisions that the government will not have control on prices, and some other areas, gray areas, that the PIA was supposed to take care of.
Very quickly, dear Frank, yes, we're talking about 18 months. We have also lied to ourselves. You know, yes. The plant is about $90 per barrel. Do the calculation, do the math. The landing cost today, because of our inefficiency and planlessness. You know, some people will now come and be saying we should have a refinery, we should do this, we should have other refineries. It's all again, you know, wrapped in some form of ignorance. Because you are still putting a lead on the prices and you have not allowed competition to come. This will be a continual basis. And then the Labour Congress will not then come. No. Whatever. Listen, at the end of the day, at the end of their channel, they either become governors somewhere or they become whatever it is, and then we are left on our own. When do I think the PIA implementation is going to happen? I pity. Hopefully, we are going to have an election in 2023. I pity who is going to be the president of Nigeria in 2023. I sincerely pity. Because we are being given a coffin that we are not being asked to raise up. Not to raise that up, so these people will come in, and if they are not really ready to really live by example and character, they will also shift it forward. And before you know what is happening, all the things that we are talking about, Nigeria being going on your own, the federalism must come, Nigeria must be made to produce, and the fact that the physical will, as in said, yes, please quote me on this, my last word on this. When President Muhammad Buhari came, I was in the oil and gas industry. And at the time when Mrs. Okonjo-Iweala was the coordinating minister for the previous regime, we gave him a paper and we told him, this is the time to begin to do things now. You know the response he gave us, you all know it, that no, I don't believe us.
Okay.
All of you are,
Okay, let's try to wrap it up now.
And that was not taken. If whoever is going to come into government will be frank enough, to say enough, we must stop this bleeding and we must do the right thing. And I'm going to start by example. What I take from the state, my environment, the legislators, and people begin to now then see that yes, I'm leading by example. And then leaders will be able to now get to our promised land. I don't see the PIA being implemented the way it is also fiscally.
Okay, I think we need to leave it there.
Unless if we now have a great crash, a plant comes to say about $2 or $3.
Okay. I think we need to leave it there now. Point taken.
Okay,
yes.
Thank you.
Yes, sir. Thank you so much, Mr. Akin Fatuke. He's public affairs analyst and chartered accountant. Well, thank you for your time on Business Breakfast.
You are welcome.
Yeah. You're watching Business Breakfast, coming to you live from our studios here in Lagos, Nigeria's commercial capital. Stay calm. After the break, we take a look at the current sentiment in the Nigerian equities market as bulls continue to gain. Well, last week, we'll take a look at what the market did and the current trend. We're back in a moment. Please stay with us.
Mama, you're coming to Lagos. Banga. Baby, Mama just called me now. She's coming to see you. She asked me to tell you to make banga soup for her. And she's close to the house. Oh.
How do you expect me to prepare banga in just few minutes?
I have a solution for you.
Really?
Mm-hmm.
Sabi cook the banga. Not going to enter my family.
Pali banga is used in making other exotic dishes such as banga jollof rice, banga efo riro, banga asaro or yam porridge, banga egusi, and many more. Pali banga is easy to open, no preservatives, no cholesterol, and no coloring. Approved by NAFDAC. Manufactured by Pali Agro Products Limited. Available in all leading stores and supermarkets nationwide.
Pali banga, natural palm fruit extracts for tasty African cuisine.
Powerful looks command respect, they say. The perfect body, the perfect grooming, and ultimately the perfect skin. Looks, style, and grooming makes the ultimate man. I've found a ridiculously easy way to make my skin always feel epic. My name is Neo. I found Blemiviv, and now my skin finally makes sense.
Most people don't understand the magic of the perfect skin, the allure of a well-pampered skin. We bounce from skincare products to skincare products, from spa to spa. Looking for that ideal solution. I found the solution. And it's Blemiviv Skincare and Spa. My name is Neo, and I'm proud to be a part of the Blemiviv family. Most people don't understand the magic of the perfect skin, the allure of a well-pampered skin. We bounce from skincare products to skincare products, from spa to spa. Looking for that ideal solution. I found the solution.
Glad to have you back now. This is Business Breakfast coming to you live from our studios here. So we turn our attention to looking at the equities market now. So take a look at the week-on-week review. The NGX All-Share Index appreciated by 0.55% and market capitalization went up as well by 0.54 to close last week at a high record of 46,205.05 point and 24.89 trillion naira in terms of market capitalization. A turnover or total turnover of 1.44 billion shares worth about 19.08 billion naira in about 22,000 deals was traded last week by investors on the floor of the exchange, in contrast to a total of 1.8 billion shares valued at 47.4 billion naira that exchanged hands the previous week in about 20,000 deals. The top three sectors include financial service industry by volume, led activities chart with about 793.12 million shares. And if you look at the amount is contributing about 54.77% and 42.72% to the total equity turnover volume and value respectively. But if you look at the ICT industry, trailing behind, the financial sector in second place with about 215.5 million shares, worth about 3.7 billion in about 1,000 deals. Coming in third place was the conglomerate industry with a total turnover of 98.2 million shares, worth about 190.2 million naira in about 88 or 889 deals. Well, trading in the top equities is Guaranteed Trust Holding Company PLC, Cartway Business Solutions PLC, and Charms PLC in terms of volume, which accounted for about 308.07 million shares, worth about 2.8 billion in about 2,000 deals, contributing 21.27 and 15.05 to the total equity turnover and volume and value respectively. Well, if you look at the top five gainers for last week, in terms of review, the ETI, that's EcoBank Transactional Incorporated. You look at the Academy, you look at Courtville, International Breweries and Guinness were all among the top five gainers. And the top five decliners respectively include CIN and iLeasing, you have University Press, you have Prestige Assurance and Linkage Assurance, while Dangote Cement as well lost about 24 naira, 30 kobo. That's about 8.53% as at last week. But if you look at the earnings that are also coming into the market, those are also other areas we're going to look at. Let's call in Ambrose now. Mr. Ambrose Omodian is a Chief Research Officer, Investigative Consulting Limited. He joins us via the telephone now. Thank you for taking out your time to join us here this morning. If you look at the market last week, the market did about 0.55% week on week. And of course, the trend we're seeing lately with the coupled with the earnings in the market as well, a lot of people attributed the current trend to the fact that one, earnings are coming into the market, and then profit taking is also happening at the same time. How do you react?
Yeah, actually, if you look at the market performance from the fourth unit of the month of January till last Friday, we saw that the market has been on a bullish trend. But for last week, actually, we saw a bullish trend, and attributed to, as you just mentioned, to profit taking and that's slowing down the market. After the market has traded above the 54,905.16. It says that the market is almost touching 47,000 before it pulled back. And it was a result of profit-taking activities from one of the big cap stock, Dangote Cement, and we understand what it means when people are coming out to take profit to put out the market. But the reason that the market is close profit for the week under the scene. But yet today, the market is also looking at almost 9 to 9.something% to close the month, knowing that today is the last day, trading day for the month of January. And I will tell you that the good thing is that for the past 3 years now, we have seen that January has been an uptrend. But the good thing is that for this year especially, we have seen a straight uptrend in the month of January. That also come January in terms of selling this hit at all, but rather we saw a positive sentiment that comes with this result that just released to the market. And the good thing is that the result that just came to the market, I'm telling you, they beat expectation. These are according to better than expected earnings, because most companies, especially in the agriculture sector, the healthcare, and the banking sector that we have seen, and also even those that are coming from the service sector, especially from the NACO and SACO, so that these numbers are very, very impressive. It gives an insight what investors should expect at the end of the year, at the end of the end of third quarter, because this was that we are going to say that is between now and 31st of March, we expect their result to come again, or the third one that will come with dividend. But as for February, we are entering now. This February, we expect that they are going to release with the corporate action to start hitting the market. But again, now, I should just let the investor know that if you check the pattern of the market for the past 5 years, February has not been a favorable market. But because of this anything that we are seeing that beyond my expectation, I see that there might be a reversal in this year's February market. Now, considering that the last FTC meeting, rebate was retained, and also during the last common market option for TV, there also rate declined. On that note, my see more funds flowing into equity split. Now they are seeing numbers from these quoted companies that are being expectation, indicating that they are likely to be a higher dividend payout for 2021, because the numbers we are seeing, I'm telling you, for the last almost 3 years, almost the same numbers, that means the market, the corporate bodies that they are coming out from their COVID-19 slow down. Because the numbers we are seeing, I'm telling you, it beats my imagination, because most companies are putting numbers, especially from Presco posted a positive number of almost 100% top line and 300% no profitability level. It tells you that these companies are also integrated. Okay, you need also fixing. Fixing posted a positive number. This is as mentioned earlier, the result was positive. This keeps an investment that we need to look at and we need to just talk about that. This will just begin.
Let's quickly look at, yes.
Don't forget that in February, because of this market dynamic, I expect also the deficit again to come also with February. But now we start seeing those companies that give us corporate action, especially companies like Yoka, Genius Bank, Access, Dangote Cement, companies in February to use their audited accounts with corporate action. It's also going to change the face of the market. That's why I said February 2022 might be different from other people who have said in the previous 3 years, because other years have started February has been red, but this year I don't think February is red because we are seeing a better number that big market expectation that we are trying to move on. Especially as we are seeing that high dividend will come, those companies will go that dividend for this period. That will support the market going up into the new month of February.
Well, of course, today is the last trading day. Before we get to that, you giving us what your outlook for what the market is likely to close the month of January with. I want us to look at some of the earnings we're having that are trickling into the market. But the one I want us to focus is the Unilever Nigeria, the fourth quarter financials. On audited result shows that the company makes about 52.21 billion, and it means that it went up by 35.03%. So if you look at the profit after tax, which is about 3.48 billion according to the company, the gross profit is around 19.97 trillion. But this is where I'm going. Well, if you look at the brand and marketing expenses, that's around 818.05%. So the question will be that how did this company was able to post this kind of result, and where did they make their money from? if you look at the fact that the marketing expenses went up in the year under review by about 118.05%. How do you react?
Okay, if you look at when it comes to this manufacturing company, you know, in this economy now, they are already at a tight corner. But when you see a company that is doing their top line, it means that that company is getting to another market or it's expanding. And for you to expand, it is called that you need to expand your seed. If you want to make more money, you need to spend more money. If you want to generate more seed, you must spend more money to want to drive your seed. And the good thing is that at their top line, they are entering the market, they are pretending like you have to put their top line above 20%, which is a good one. And so looking at their bottom line, also in that direction, because for their earnings per share to move from 8 kobo to about 8 kobo, it is that they have gone tremendous in terms of their bottom line. As an investor, your concern is at the end of the day, what is the profit after tax? Yes, the company that has grown its cost of sales and put it is not again, because if you have improved your top line, you need to spend more money to drive that sales. But what matters to you and I as an investor that you want to see the bottom line of this company, which is the profit after tax, according to the level. You want to know what they've done at that level after they have got their top line. For many people who have seen an improvement in their bottom line, which means that at the end of the day, investors in Unilever are likely to get the dividend from their company that they have invested. But my concern is that from 8 kobo to 68 kobo, yes, there's a huge growth, but the number is small compared to the price of the stock. Because if Unilever is selling for 14 naira and we're seeing just 68 kobo at the end of the year 2021 full year earnings, then they're not going to pay more than 50 kobo for a dividend, and they're going to borrow money to pay dividend. But the good thing is that the shareholder structure is tight, and we see that many of these foreign domestic companies will have major foreign investor, direct investor in that company, so that their shares have been all this while expanding up because most of these foreign investors are kind of increasing their stake in their company. That means when Unilever put this kind of result, I see that Unilever International might have to increase their stake in Unilever Nigeria. That will put the price up. Not to just put the price up. The action of Unilever International is to buy more to Unilever Nigeria. That will put the price up. But the construction of this earnings was that if you sign that Unilever is really coming up, because the company is going from 8 kobo to 68 kobo, it's a good improvement.
Let's wrap up with this, Mr. Modion. The all share index is already doing about almost about 9% already since the beginning of the year. How is the market likely to close today? Today marks the end of the trading for January.
Yeah, for me, on the strength of the numbers released so far, I see the month of November even closing above what we have seen the previous 2 years. Because the previous year we had about 5% gain in January, the other one 8%. But for this one, we are going to see either 9% gain in this year January, which is good. But on the strength of the numbers are released so far, I think we are going to release today. Because today is the last day for those people that release all of these accounts ended 31st December. Today is the last day. If it comes and this number also go in line with what we have said before, I think the market is close positive. You can see this morning, market reacting to Facebook better earnings or improved numbers or fantastic number has.
Okay.
It has moved from 87 naira to 95 naira, gaining almost 8.2% this morning. It tells me that this kind of number will support the market this morning to close higher at the end of the day. For me, we'll see January this year closing above the previous 2 years.
Okay, I think we should leave it there. A good time to say we'll come back here tomorrow. By the time we're here tomorrow, it will be a new month. Thank you, Ambrose Amodian, Chief Research Officer, Investigator Consulting Limited. We appreciate your time on the show.
Thanks for having me.
Yeah. It's the Business Breakfast. We'll take a moment and we'll return and we'll look at the commodities market. We'll be back in a moment. This is Business Breakfast. Glad to have you back now. It's time to look at the commodities market. Brent crude touched $90 per barrel briefly last week for the first time in years. This latest jump was attributed to tensions around Ukraine, but this is the most transitory season for oil price rises. The bigger reasons all have to do with the fundamentals, and $90 per barrel of Brent may be only the beginning. A lot has been written recently about OPEC's spare capacity and the not too rosy outlook for it. That spare capacity is in decline for several reasons, but chief among them appears to be underinvestment. As a result, JP Morgan earlier this month warned that Brent could rise to around $125 per barrel as OPEC's spare production capacity falls to 4% of total capacity by the fourth quarter of 2022. The International Energy Agency has gone even further, warning OPEC's spare capacity could fall by half to just 2.6 million barrels per day in the second half of the year. The agency then went to say that if demand continues to grow strongly or supply disappoints, the low level of stocks and shrinking spare capacity means that oil markets could be in for another volatile year in 2022. Right, let's look at the gold prices. What is doing now? Prices were flat on Monday, backing the weak trend in the international market. Gold yellow metal was set for the biggest monthly drop since last September. Gold remained under pressure as the US dollar strengthened ahead of key central bank meetings, making bullion more expensive for holders of other currencies. Gold futures on multi-commodity exchange were flat, up by merely 0.01% or about 5 rupees at 47,590 rupees per 10 grams. Silver futures gained about marginally by 0.02% or 12 rupees at 61,046 rupees per kilogram. U.S. Federal Reserve plans to raise interest rates in March on the assumption that the economy will largely stay clear of a fallout from the Omicron coronavirus variant and keep growing at a healthy clip. Well, I think this is where we call it a wrap on the show this morning. Many thanks for watching. It's Business Breakfast. We'll be back again tomorrow. I am Frank Omalape. I'll see you again.